Thanks, Rob. Thanks, George, for setting this up so nicely, as we agreed beforehand, of course. And thanks to everybody for staying. I know there's lunch as well, but I'd like to believe that at least some of what I'm going to say is useful or interesting. What I'm going to try and do is give a presentation in three parts. One, to remind you all how good a place Canada is generally, and the TSX and the TSX Venture Exchange are as part of that. It's a lucky country in lots of ways. Two, to talk about the importance and the role of the mining sector in our business and our exchanges in the mining industry. And then three, a bit of an update on where the mining market is with us, but hopefully in a bit of a wider context than that. I will be statistic heavy. There's the disclaimer. So as I said, Canada's a lucky country in many ways, resource rich, which is always a good thing, even if it's not quite such a good thing today as it was a few years ago. Very stable, with a well-regulated financial system generally, and a banking system particularly, a very strong equity culture, and the world's biggest market for just about everything just across the road. Canada itself is resource rich in lots of metals, minerals, and in energy. So there's a lot of expertise in the country, real expertise as well as financial expertise, and that's led to Canada being the world's biggest market, Toronto being the world's biggest market for resource listings. A snapshot of our market, well, a view of our markets over the last 10 years. There have been 10 turbulent years, but what I think the chart actually shows is a remarkable level of stability overall in the amounts of money that have been raised in each of those years. And in fact, despite Canada's resource-heavy nature and the Toronto market's resource-heavy nature, the first half of this year, which is the bar on the far right of the screen, if you annualise that out, we're going to have the best year for money raised ever. I don't think that's probably not the case. But despite our strong focus on natural resources, the markets are continuing to function. A lot of what George said I really wouldn't dream of arguing with, but it's not entirely bad news. One of the things that I think really distinguishes the Toronto market is the junior-senior mining structure that we've got. I think there's arguably only two stock exchanges in the world that have really kind of cracked this junior-senior business. The other one is the London Stock Exchange, where I worked for a while with AIM. In Toronto, we've got the TSX and then the TSX Venture Exchange. For me, the big difference between the two, and where clearly Canada shines, is the way in which the junior market in Canada is able to graduate companies that start on the junior market, often very, very small, have been, and will be again, I believe, able to raise money, to grow their businesses, and in due course to graduate. So over 600 companies have started on the Venture Exchange and gone on to the TSX. Some of those are in the TSX 60, our blue chip index, and 260 odd of them are mining companies. London doesn't really have numbers to match that. We say we've got a diverse issuer base, so this slide goes in every sectoral presentation, but as you can see, mining, the big brown bit on the left, is by far the biggest by number of companies, over 1,400 companies. And we think that we have a global position in the sector. There have, as I said, been days, times, years when that's been a better thing to be a global leader in than it is now. But it's unusual, I think, that any stock exchange actually occupies or has a real industry or sector franchise. The only other one I can really think of is NASDAQ. And lots of stock exchanges will say they're good at tech, and we're good at tech. But when people around the world think about technology, they think about NASDAQ. When people around the world think about mining, even though it's really hard at the moment, I think they still think about the Toronto markets as a very important place for them to finance mining businesses and mining projects. So these are the numbers from last year. 62% of all the money raised, all the equity raised by publicly listed mining companies in the world was raised in Toronto. And that kind of, this is the pie chart on the left, gives you a 5-year view. It's 54%. So Toronto markets are absolutely pivotal in the equity financing of mining companies. Investors know that, mining executives know that, and we know that. And if there's a single message that I want to sort of leave the audience with today, is that I think we really recognise the value of that franchise, and I think the value of what the platform that we operate to the industry. And although the market is kind of gloomy at the moment, possibly in a coffin covered with roses, according to some slides, if and when the life comes back to it, we'll be there, and we're going to continue to invest and build on that franchise, preserve that franchise, and be there for the industry. So this year, or actually no, that's in the first 7 months of this year, mining companies in Toronto have raised $6.5 billion in new equity. I agree that hardly any of that is for very early stage companies. A little bit is, but Toronto offers a platform right through the life cycle, and also for companies active around the world. We've got companies with projects and with mines in, I'm not going to say everywhere, but a very large part of the world's surface, and indeed some of the underwater surface of the world, as we heard earlier. The companies that we do have listed are heavily skewed by number towards the early stage. This adds up to more than the total number of companies listed, because of course some companies have properties that are in different phases of the life cycle. But of the 1,400, or just over 1,400 companies listed, less than 200 have production. That leaves 1,200 are either exploring, trying to explore, further advanced exploration, or in the development phase of their companies. We are, in our own way, very exposed to junior mining, and determined to do what we can, to the extent that we can, to support it. Amazingly, even in these difficult times, this is updated to the end of June this year, the analyst coverage that's available for mining companies in Toronto continues to be very good, and I'd say better particularly for small and mid-sized companies than on any other stock exchange. Part of this sort of infrastructure that Toronto supports, and that the TSX and the TSX Venture Exchange try to maintain and work with. So that's kind of mining in Toronto and what the market in Canada looks like. And now I want to touch on, or try and give what we see, the things that we look at in the mining market so far this year. I am going to talk about delistings, because if I don't, I'll get asked about it, and I'll probably get asked about it anyway. The bar chart on the left shows the number of companies delisted from both markets, TSX and the Venture Exchange. The vast majority of those are going to be from the Venture Exchange. That shows the last 4.5 years. The number's gone up, but it hasn't gone up radically. I guess the number this year will be a little higher than 2014, as in the first 2/3 of the year, I don't know if we're allowed to talk in thirds, it was 145 delistings, of which 65 were mining companies, but quite a lot from other sectors as well. It isn't something that is unique to this sector. Other industries, other companies, other sectors have tough times for all sorts of reasons as well. And over the same period, the bar chart on the right shows the reasons for delisting. I'm sorry about the small print. I think the slides are available afterwards. If not, I'll send them to you. By far the biggest reason for delisting is that there was some sort of M&A activity. So delisting is happening, it's increasing, it isn't radically increasing, and it's probably not unhealthy. If we look at financing trends around the world, so this is not these are not Toronto figures, these are global figures as far as we can gather them using third-party sources. 2010, 2011, it was bonanza. What I think is interesting is that the last 3 years, again, it's fairly stable. $14 to $15 billion raised by mining companies around the world. The bar chart on the right shows the number of transactions. So the number of transactions has been going up fairly meaningfully. So I guess you could say that the average size of transactions is going down. I don't know whether that's I don't know how much that means or what that means. But in the last 3 years, since metals prices began their fall, the amount of money raised by publicly listed mining companies in equity around the world has been broadly stable. This looks at the number of financings around the world and breaks it down by different stock exchanges. The big blue bar is us. This is the number of transactions. What's interesting, I think it's interesting, is that in the last couple of years, the brown bar got very high, and in 2014, more than us. That's ASX. So the number of transactions, the number of financing transactions last year in Australia was almost 1,700, in Toronto it was just below 1,500. But if you look at the amount of money raised, in Toronto last year, $8.9 billion raised, and on the ASX it was less than half of that. So I guess that means that Australian markets are doing a larger number of smaller deals. That seems the way the markets are working. What's going to be interesting, every so often those numbers get skewed by a big deal. In 2011, the second one from the left, Toronto the amount of equity raised in Toronto was 12.5 billion, and London popped up with 11.9 billion, much higher than their sort of average run rate, and 10 billion of that was Glencore. And I guess this year Glencore have done another big raise. So I think that's what happens in London much more. The occasional very large ticket. Toronto is much more in the sort of independent, small and mid-sized range of companies than that. So let's say a spread of the risk. This shows liquidity in terms of value traded. The dark blue bar is us, and the pale blue one, that's sort of second highest next to it, is the ASX, the Australian Stock Exchange. In the last 3 years, I think a trend is developing where in a harder market, in a tougher market, liquidity in Toronto has held up better, perhaps, than it has in Australia, but clearly it's lower everywhere, and it would be silly to try and pretend otherwise. Here's a bit more detail about us compared to the other major public markets that are considered or looked at as mining platforms or potential mining platforms, including Hong Kong and New York and NYSE market, which is their junior market. You can put all sorts of conclusions from it, but I think the interesting one is second row from the bottom, equity capital raised, and this is in the first 6 months this year. It's actually just over $6 billion raised in Toronto, way more than anywhere else, and indeed way more than everywhere else added together. 53% of all the money raised in the first 6 months this year raised in Toronto. Again, that's probably going to be, well, I assume that's going to be that figure will change because of the Glencore transaction in London, and I'm sure Hong Kong will count it, and they'll count it as well. Where the money's being, where the companies who are raising the money are doing their work, all over the place, clearly more in Canada than anywhere else, followed by Latin America, but significant amounts in Africa, and I'd say EMEA, and even some in Australia. So I think Toronto really is a platform for companies doing projects and with assets and with mines all over the world. Again, this isn't really something to go through, but a snapshot of some of the deals. So again, this is for the first 8 months, first 2/3 of the year. I think we should go to thirdly reporting. So some of the transactions, some of the bigger transactions on TSX and on the Venture Exchange. Some of the bigger transactions, clearly they're not as big, but things are happening. So there are lots of alternatives to equity, offtakes, royalties, streaming. There are the famous standby equity facilities. People talk to the multilaterals like the IFC and so forth, some national agencies. We've heard a little bit about private equity and sovereign wealth funds, and some of the debt products that are available. But I do think it's important not to forget equity. It is still a very important part of the funding recipe for companies if they can do it, and there's no better place or bigger place to do it than Toronto. It's really, really hard, but it's not impossible. A couple of things that we're doing to try and make it easier. We signed an agreement last year with the Santiago Stock Exchange in Chile. Chile is a country with a huge mining industry, a very good stock exchange, a very well-developed investment industry. The buyer side, particularly pension funds, are very good, and they didn't have a single mining company listed. So we've done a JV between the, actually no, it's not a JV, we have a venture between the TSX Venture Exchange and the Santiago Stock Exchange for them to build a platform to list junior mining companies in Chile using Toronto's expertise and experience and indeed people. It went live in May this year, and it is beginning to get some traction. And one of the interesting things about Chile is that Santiago is it's part of MILA, which is an Andean chain of stock exchanges plus Mexico. So it kind of brings local liquidity back there. I was going to end on that and a positive note. And there's one other thing I wanted to say is that we've got a comparatively new chief executive, Lou Eccleston, who started in November last year. We've got a new guy who's head of equity, Nick Thaddery, who started at the beginning of this month. And interestingly, when the new head of equities, Nick, turned up 3 weeks ago, virtually the first project, well, no, in fact, the first project that he was told to pay attention to by the CEO was, what do we do about the venture exchange? And it's not going to be close it down or rebrand it or anything sort of apocalyptic like that. But what can we do as an exchange to help the companies, help the investors, frankly, to build on and maintain and preserve this wonderful franchise that I think Toronto has in the mining industry. So it's very, very high priority for us as an existing business and also as a future business. So it is really hard for junior companies, and particularly exploration. It's enormously difficult to raise money in public markets anywhere. But the public markets are functioning. $6 billion raised this year, so by mining companies in Toronto alone, and we're very determined to keep that position up and do what we possibly can to build on it and preserve it. So that's it. Thank you very much. Thanks for listening.